Never rely on a single source of income. Invest on a second source. That's what Warren Buffett said. When we hear about investments, we typically hear stocks, bonds, funds, and real estate. But in the past few years, Forex and cryptocurrency are starting to rise up. So today, I will educate everyone the different type of investments, as well as their pros and cons. Before we start, I just want to say that I won't mention any jobs or business on this list because jobs or business is not part of the investment field. Reason for that is, in a job or business, you work for money. In investment, money works for you. In a job or business, if you do not hustle, you don't make cha-ching. In investment, when you go to sleep, then you wake up richer than you were yesterday. See the difference? Moving on. And please, do not worry, I'm not going to be very technical here and say a bunch of big words. That will confuse the heck out of you and me. So I'm going to try to explain everything as simple as possible. After all, there's a saying, do not invest on something you do not understand. So, let's get started. Number 1, real estate. This is probably the most common investment and easy to understand. You buy a land or a house, and then you wait until the value goes up. Most investors like it because it's physical. You can touch it, you can see it, and you can definitely smell it. Now, there are many ways to be profitable in real estate. One of the common ways is to buy a property, and with given time, the value goes up. Then you sell it. Simple, right? But it takes years to be profitable. Now, if you want to be more profitable in the long run, many successful investors prefer to develop a land or a house to be leased for space. For example, let's say you buy a house. Instead of living in it, have it rented. That way, the tenant will pay for the house or land's monthly mortgage. As years go by, the overall amount of the house will be fully paid. After that, you can enjoy the continuous income from monthly rent payments. Another great example is when buying a land and commercializing it by building structures, which can be used as a business area. Now, the occupants will establish their business, and the profit? That's right, the monthly rent payments from the tenants. Now, let's talk about the risk when it comes to investing on real estate. When you buy a property and plan to sell it, to be profitable, it takes years and will vary depending on the economy of the country. Also, where your property resides. Which means, when the economy goes down, the value of your property may go down with it. But like I said, it depends on your country. Also, if you have a property and you need emergency money, it will take a while for you to sell your land or house. Because in terms of liquidity, real estate places last. Another risk is the location. Any area that's prone to disaster, like floods, will definitely lower the value of your property. And lastly, you need a big capital when it comes to real estate, meaning not everyone can afford it. Number 2, the stock market. This one is becoming more and more common, and many financial institutions like banks offer investments in the stock market. Actually, it's so common that you can go online and find a reputable broker and start investing right away. When you invest in the stock market, you are investing on companies. It's like you rooting for your favorite sports team, and you bet money saying that they will win. Investing on stock is basically the same thing. You choose a company that you think is the best or has the potential to become big or bigger, then hoping that your investment will profit because that company will grow. And one of the best things about the stock investment, you don't need a big capital to start with. Nowadays, you can start as low as $100, but of course, the return will not be much. But at least you have a choice when it comes to minimizing the risk of your investment. On the contrary, sometimes with a low investment on stocks, it can become a huge profit later down the years. Like Apple, for example. When it first started, many investors started with $1,000. Now, it's worth millions. That's why many people in the US, for example, like to invest on startup companies who has a potential of becoming big. Meaning, your small investment can become a huge profit. It's like winning the lotto, but easier and not instant. Let's talk about the risk and challenges. When it comes to stock investments, you really need to study the companies you plan on investing on. You gotta look at their history, financial statements, and even the past performance of the current CEO. it's very tedious, especially when the owner makes a decisive move in the market. Because no matter how small or big a company decisions are, there will be an impact on the overall value of your investment of that company. For example, 2018, when a video game company like Blizzard announced a video game, not released, announced, that the consumers did not agree with, the company lost millions of dollars overnight, thus lowering the value of their stock. It's those kind of things that you will have to constantly keep watch to see whether you made a good or bad investment on a company, whether you will gain money or lose it. But the biggest risk when it comes to stock market is that anytime a company can go bankrupt, no matter how big or how long they've been in the market. Like the Lehman Brothers, for example. In the early 2000s, they were one of the biggest banks in the world. Over $600 billion of loan. A 3 to 4% drop in the US market, and this company spiraled down to their bankruptcy. Many investors took a huge loss because of that unexpected turn of events. That's probably the worst case scenario when it comes to investing in stocks. Number 3, Treasury Bills. Want to invest on something that doesn't go bankrupt and short term? Invest on Treasury Bills. When you invest on this, you are investing on the government. But what are you exactly investing on? Well, most of the time, government projects like building roads, government structures like city halls, and let's not forget about transportations like rail systems. The only downside to Treasury Bills is the low return and fixed rate. Also, the holding period, which is typically 1 year with 3% return on investment. So if you have extra money and you want to invest on something safe for a short period, invest on Treasury Bills. It can't go bankrupt and it's guaranteed by the government. Best thing about this, anyone can invest because you can start as low as $100 or 5,000 pesos. Number 4, bonds. There are 2 types of bonds, corporate and government. Since we previously mentioned Treasury Bills, let's talk about the government bonds. It's pretty much the same thing as Treasury Bills, except it has a higher fixed rate, like 6 to 8% on average a year. However, it has a longer holding period, around 5 to 10 years. When it comes to risk, it's as low as Treasury Bills because it's government guaranteed. Let's talk about the corporate bonds now. Very similar to Treasury Bills as well, except it's corporate. You are investing on big company with projects. And since it's bonds, it has 6 to 8% return on investment as well a year. And it has at least 10 years of holding period. Now, an example of a company project is like, let's say it's a real estate company. Their project will involve land developments where they buy a piece of land and they convert it to a commercial area or a housing lot. But what's the downside of bonds? Well, definitely the 10-year holding period. So it's not very liquid when you need emergency fund. And in addition, even if you can sell it to the market, you will end up in a loss because of the change in interest rates. And also, let's not forget the ultimate risk of corporate bonds. Any company can go bankrupt anytime, regardless how big they are. Now, the minimum investment on bond is slightly higher than Treasury Bills. You can start with $200 or 10,000 pesos. Number 5, pooled funds. Now, pooled funds is the combined money of investors managed by a fund manager. Meaning, instead of you doing all the work of deciding where to put your investments, have a professional do all the tedious things for you. Here's a few examples of pooled funds. Let's start with the most popular one, mutual funds. The startup capital mutual fund is typically as low as $100 or 5,000 pesos. And when it comes to holding periods, you have a choice of a short term or long term. 12 months and below is a short term, while the long term is 36 months and above. Now, as for the return, it varies on the performance of the fund manager. But on average, it's around 6 to 8% a year. Let's talk about the risk side of mutual funds. The risk will vary depending on how good the fund manager is in terms of choosing where to invest your funds. In 2018, here in the Philippines, mutual funds were down a few percentage due to the economy. What makes it worse is that the fund manager has a fixed fee, meaning whether you profit or loss, you will get charged. Now, let's talk about the second type of pooled funds, which is the hedge funds. Now, this isn't really available to the masses due to the high startup capital. It's typically $2 to $5 million to qualify. Unlike mutual funds where you have a short term, hedge funds are typically a 10-year and up holding period. But the return is massive. Let's say you invested $5 million. In 10 years, with an outstanding performance of the fund manager and little to no loss, your investment can become $1 billion. Pretty insane, huh? And yes, this is one of the reasons why wealthy individuals become even wealthier. So if you want to become a billionaire, invest on hedge funds. Number 6, Forex. Forex is short for foreign exchange. It is the conversion of one currency into another. Now, this one is the most flexible and simply managed investment. Since it's pure currency, this is the most liquid compared to other investment vehicles. One of the best things about Forex, it cannot close or go bankrupt like companies because currency itself represents a country. And you never heard of a country closing, right? Now, there are a few ways to approach the investment side of Forex because typically, Forex isn't really an investment to other people due to the fluctuations of currency value. Meaning, money doesn't keep getting bigger and bigger like companies that grows. Because in Forex, when a currency goes up, it must always come down. It's vice versa. Forex is mostly used for trading, where you buy and sell currencies. Let me break it down to you. The short-term investment on Forex is when you buy a currency during the holiday season. For example, dollars in the Philippines are cheap during the Christmas season due to high incoming remittances in the country. Many investors like to buy dollars around early December, then they wait until the price goes up so they can sell for a decent profit. Now, the return will depend on how much dollars you bought. The more you buy, the higher the profit when you sell. So there isn't really a matter of required capital. It really depends on you. Pretty flexible, huh? Earlier I mentioned what's a mutual fund, right? Well, the long-term investment of Forex, it's like a mutual fund in a way. You have a fund manager who will do the investment for you. The way it works, you provide a capital, the fund manager will do all the work to make all your investments profitable in the market. And one of the best things about it is performance-based. Now, as for the starting capital, it depends on the fund manager or service provider. Now, for the downside of Forex, the only risk you have in Forex is, number 1, not being able to manage your money the right way. Number 2, investing without doing your research or understanding the market. And also, before you invest on a service provider to do the work for you, always triple check their history of performance and their partner brokers. Always make sure they have all the legitimate documents and licenses because there are many scams out there and most people fall for it because they do not do enough research. Don't be a dummy and invest blindly. Otherwise, you will go broke and most likely go depressed. Yeah, you don't want that. And speaking of scams, number 7, cryptocurrency. Just kidding, it's not a scam. But it isn't an investment either. Huh? What? How is it not an investment? Because cryptocurrency is a speculation at the moment, meaning it's pure gamble. And I'm sure many of us have heard of the Bitcoin hype. So many people made money, but so many people lost as well. Investment is about minimizing losses and risk. In gambling, it's 50-50. That's why investing on pure cryptocurrency is pure speculation. There aren't any reliable sources that can support whether the value of crypto will go up or down. However, there is an investment on cryptocurrency instruments. You can invest on the development technology of it, like the blockchain, which is the convenience of transferring funds instantly between peers. And also, it's decentralized, meaning no banks in the world owns it. Many investors see the future in this, but it's like stocks. If you believe in a company that has a potential for massive growth, go for it. Go ahead. But make sure you do thorough research before dropping on some cha-ching on it. Number 8, life insurance. Wait, life insurance? Must be a typo. Insurance isn't an investment, it's a security. But if you want to know why it isn't, watch my buddy Eric. He will explain why life insurance isn't an investment. Just click on the link below. One last thing, ladies and gentlemen, before I wrap this up. Investments will always have its risk, but the biggest risk is you. Because it's you who have the power to decide what you want to do with your money. Always, repeat, always research an investment before funding it. In today's time, so many scammers out there. You do not want your hard-earned cash to disappear in the blink of an eye now, do you? So please, be smart out there. Alright everyone, hopefully I was able to educate you about investments. There will be a part 2 where I will make the investments fight each other to see who reigns supreme. Just kidding, but seriously though, I will make them fight. Because after all, you want to know what's best for you, right? So stay tuned, and thanks for watching. And if you like this video, please subscribe to our channel for more amazing knowledge. Also, don't forget to turn on your notifications because you do not want to miss our upcoming videos. So ladies and gentlemen, I wish you good fortune on your investments. Because in InvestPro, you profit, I profit.